Okay, today I just wanted to make a quick video illustrating some paper trading. This is just pretend day trading. Doing this with fake money. This is on the thinkorswim Ameritrade platform. Um, just just bought into some Sprint right here. Bought 1,000 shares. Around it's around $10 a share. So you figure in around $10,000 simulated investment. It's gone down a few ticks from since I bought in. This is where I bought in, as you can see, at 972. And so I'm going to illustrate how to do stops. This is something that I've been kind of messing up a lot with lately. And I would click over here, and I had it on auto send, and it was setting a limit order. And I don't want that. I want it to be a stop. So I want it to trigger once it hits the market price of, say, 962 to count, just to cover my losses. Say if I say I only want to lose $100 on this trade maximum tops, I would click on this spot and I want to edit the order. So here it says stop standard. I would set this to mark, and now bring this down to, it's at 962. I can bring it up to 9. Let's see, the stock's at 970. I'm going to bring it to 960. And you click confirm and send. So now there's my stop. To illustrate a different kind of a stop, you can cancel this one. A trailing stop. Say if I want it to trail the current price, the current market price, I can set it to be 10 cents or 8 cents below, and as this moves up, the trailing stop's also going to move up. So let's illustrate that. I'm going to make trailing stop this time. You go to trail stop, you set it to mark, and it's set at minus 10 cents. I'm going to do minus 8 cents. Confirm and send. Here we go. Now it's 1, 2, 3, 4, 5, 6, 7, 8 ticks below the current market price. So if this jumps up to 980, where's it going to be? It's going to be at 972. It's going to jump up as well. But if this comes down, if the market price here, this yellow square, comes down, now this isn't going to move at all. This is going to stay. It's going to hold its ground. So it's almost like a stalker. This little trailing stop stalks the market price. So right now I'm just going to sit back and watch and see what happens. I probably bought in at the wrong point, but I'm just trying to illustrate the stops and the mistake I was making. Because if you just do a limit, things sometimes go a little funky over here. I still can't totally explain it. I'm still learning about limit stops, but if I wanted to do a stop limit, trailing stop limit, you can also do that. But the thing is, when you do that, you're not guaranteed to fill. Right here, it's going to fill my sale at the current market price. So it could sell it a little, a few cents above or below, depending on what happens with the fluctuations. But at least I know if I'm protected here. If this suddenly tanks, if everything just suddenly starts moving really quickly and I can't keep up and click fast enough, it's going to sell for me automatically right here. Right here, Sprint has been a stock that's been slowly rising, and I think this is one that's really undervalued because it's one of the 4 major cell phone cellular carriers in the whole country. And basically T-Mobile, there's been talk about maybe T-Mobile merging with Sprint, and Dish has been shopping, trying to buy them out, Dish Network. So some things could seriously take off with this stock. If I decided that, right now I'm at a $30 loss from where I bought in. I probably bought in at the wrong time, but see how we can see the yellow line is the more long-term average. It's just starting to kind of level off. But the market is up today, so we never know what could happen. I could hold this for a little while and see where it goes. Make a decision at the end of the day. As long as if it doesn't happen to hit my stop, that's where I'm telling it to get out. I'll take the $100 loss or whatever and just call it a day. You got to figure there's going to be a $10 commission to buy in, a $10 commission to sell. So that's $20 in itself. So basically, once this gets above 10 ticks above the market price, this trailing stop is now going to be right where I bought. It's going to be 8 ticks down. So this is once the market price, if it gets up to 980 a share right here, the trailing stop, this is going to be moved up here. It's going to have stalked the market price all the way up. So now my worst case, my worst loss is going to be right where I got in. I'm basically going to just break even. That's only considering if the market goes up to 980 a share. So I'm going to watch this chart a little bit longer. If I keep the video recording, this is going to be a very long video. But I have a feeling there was just a recent spike here. You can see a little bit of oscillation going on. There's a lot of volume here, and that's, you can see where a little spike was. But right now the volume looks like it's died down a little bit. Maybe we'll see a little bit of increase. I might decide to jam the sell market button as soon as it gets up to 976 or 975, if it does, because these stocks move a lot. So this is day trading. If you don't want to day trade, then you just buy it, and you don't really have to necessarily worry about these stops or trailing stops or things like that. See, now it just tanked down to 965. So where's my trailing stop? It's holding its ground over here at 962. So that's the benefit of this type of a stop. You don't have to, if you just do a regular stop, you have to keep moving it. You have to either keep dragging it around on the chart. I can move this one right here if I wanted to. You can click it, and actually I don't think it lets you in this program, but you can right click and say if I want to reset the position. You go to order, cancel replace order, and now here I can just basically tell it to go 8 cents below the current mark, which the current mark is 967. If I was to confirm and send here, see what happens. Now it jumps down 8 cents below the current 967. It's at 959. So I pushed it back just a little bit. I'm going to see what happens with this one. And you just keep an eye on it. So it's tanking right now, as you can see, but I'm at a loss of $55 with 1,000 shares because I bought in at 972. Once it gets down to 962, I would have lost $100 on the day. Where I have my trailing stop set, that's $130 plus commission, so you're looking at $150. But you're gonna have some trades that you lose on. You're gonna have some trades that you will do really well. There was this other stock the other day, Ariad Pharmaceuticals, and basically, if you take a look at this chart, I was trading right here. Let me zoom out a little bit. Look at this ridiculous spike. I was right here. Okay, I bought in, probably somewhere around here. Let me zoom in on that. And this stock moved so ridiculously fast. It was trending on all the stock websites. This right here is where I bought in. And then it just spiked. It just shot up. As you can see. Actually, you know what? That was off. Never mind. I'm on the wrong spot. That was off market trading. This is where I started trading it. Back here on Friday. I don't remember what time it was. Let's see. Around 9, right in the morning. First thing in the morning. It was trending on StockTwits. I was like, oh, I'll check it out. I bought in, I think right about here. 9:45. I must have just rolled out of bed. Anyways, it started to tank a little bit, and then started going up, and I'm like, oh, nice. A nice little $100 profit. You know, every 10 cents, you buy 1,000 shares, every 10 cents is $100. So it just kept blowing up. It was ridiculous. It kept shooting up so quickly. It was hitting what's called these circuit breaker stops, where the market just shuts down for 2 minutes on this particular stock. I didn't know that could even happen, but that's what happened. So I got a little happy. I'm like, oh, I'm gonna get out of here. I'm getting out right now. I made $120. Let me sell. I click sell market. It sells right when the market comes back up at $750. I had a $750 profit because it literally went from here 6 all the way up to 7.5. It was ridiculous. I must have just caught it right around here or something. Then I'm like an idiot. I decide instead of just taking it away and getting out and going to mess with another stock, I decided this is probably gonna keep climbing. That's pretty unrealistic after it already had gone up over a dollar. But like an idiot, I'm a noob. I bought in again. Then it started tanking. Look at what happened. Tanked. I ended up having to buy multiple times more, put more money into it, and then climb these little advances here, and then sell. And I ended up breaking even, basically on the day. But with all the commissions, all the times I bought and sold, it added up to like $200 worth of commissions. So all my $200 of profit that I ended up with at the end of the day for this particular stock just got eaten up. So it was just a lesson learned. I should have, if you're having a really great day with a particular stock, get out while you're ahead. Don't get back into it unless you see some major dippage. If I saw this come all the way back down and then start to rise again, this is a controversial stock. It was in the news, something regarding they came out with a leukemia drug. And this leukemia drug, I guess, was banned, or now it was coming back on the market. So that's why everything is kind of going haywire on the stock. There's a lot of excitement with it. There's a lot of people trading it. The volume is ridiculous. Look at the volume on these levels. So today, it's starting to climb again. Check this out. This morning, this is probably pre-market, it just flew up again. So now it's going up, it's going down, it's all over the place. This might be a risky stock to invest in, but for today, I'm probably not going to mess with it. But this is the story of day trading. So, anyways, I'm talking way too much. Hopefully, this video has helped. Hopefully, not confuse you more than you already are confused, because I'm pretty confused myself. So this is like the blind leading the blind. Anyways, have a good day and have fun trading stocks.